The fifth generation wireless network, 5G, is generating a lot of buzz these days about what it might mean for consumer devices, for innovation, and for economic growth. These applications are built on infrastructure. Without it, they can't exist. And here to talk about the real estate and infrastructure behind 5G, we have Ji Zhang, Senior Research Analyst on the REIT investment team here at Cohen & Steers, and Umberto Medina, Senior Research Analyst on the infrastructure team. Ji, let's begin with you. How is 5G different from previous network generations?
So the difference with 5G is the amount of data being generated and how it's likely to be used. So when you look at 2G, 3G, 4G, those are mostly consumer-driven applications, so video and photo sharing. With 5G, there's potential for more industrial uses. Even though the standards for 5G are yet to be set, it's expected to be at least 10 times faster at 1/50th of the latency and could support up to 100 times more simultaneous connections. What this means is we could see more widespread adoption of Internet of Things, smart cities, autonomous vehicles, and many other uses that we can't even imagine today.
So how can investors best position themselves within the 5G theme?
Several industries will be directly or indirectly impacted by 5G. We believe, however, one of the best ways to benefit is to invest in the sectors that provide the critical infrastructure needed for 5G and also more generally to support continued data growth. And those sectors are cell towers and data centers.
Okay, so let's take these one by one. How are cell towers positioned within the 5G landscape?
Well, cell towers lease their space and their macro towers to wireless carriers, broadband data providers, and government agencies. Historically, data consumption has rapidly grown with each new generation of wireless technology, forcing carriers to continuously invest to keep up with demand. We believe this trend will continue with 5G. To give you a reference, by 2024, we believe wireless data consumption will be 5 times 2018 levels. Carriers will have to heavily invest in 5G infrastructure to keep up with demand. In turn, these investments will translate into additional revenues for cell towers and therefore cash flow growth in years to come.
And how do data centers fit into this ecosystem?
With data centers will also benefit as additional storage and compute capacity will be needed to support the data volume generated from these new 5G applications. So it will be even more important for the data centers to be closer to end users for faster, more efficient delivery of data.
Do you expect 5G investment to follow a cyclical pattern?
So a typical technology investment cycle lasts about a decade. So if this historical trend holds, we would expect 5G investment to sustain an elevated pace of CapEx investment over the next 10 to 15 years, and this could benefit tower operators.
So is the 5G investment case primarily a US-centric phenomenon? What about opportunities for global exposure?
Well, if you think about the cell towers angle as an investment opportunity in 5G, it used to be US-centric, but not anymore. The US pioneered the independent tower model, which now has been widely adopted. Starting 20 years ago, wireless carriers started to sell their tower portfolios to independent tower companies. And today, the shared infrastructure model has been widely adopted. Different versions of this model have been also implemented worldwide. And we think as the opportunity of investing in towers is global today. To give you a frame of reference, we have today more than 10 tower companies when only in the early 2000s we had a handful of US-centric companies. And this number of listed players continues to grow.
So from the investor's point of view, how different are these markets from each other?
These markets can be very different. To give you a few examples, in Europe, the driver of growth is the consolidation of redundant structures. In Latin America and Asia, several of the listed tower companies are still controlled by wireless carriers. And in India, the companies don't have inflation escalators. You need understanding of the local markets in order to have an investment edge. And at Cohen & Steers, we have a dedicated group of analysts with local expertise, and we believe this is one of the key competitive advantages of our firm when investing in infrastructure.
Is this also true of data centers?
Like towers, each data center market also has its nuances when it comes to the entitlement, permitting process, and the availability of power in each market, and that creates a different pricing dynamic. Generally, when we look at the US, it's about 1 to 2 years ahead of Europe in terms of cloud adoption and data center migration, and then Asia and LATAM are a couple years behind that. So from an investor perspective, as some of these international markets catch up, if we can catch the acceleration curve as these markets catch up to the US, that creates a potential investment opportunity.
A rapidly evolving space. It'll be interesting to see how the industry develops. Once again, that's Ji Zhang and Humberto Medina from the REIT and Infrastructure Investment teams here at Cohen & Steers. Thanks to you both.